Hey, one thing that pops up every now and again that I want to talk about in Moneyland and in the podcast Facebook group is a question that Amanda put in, and we will always answer people their question where they're at, John. So whether they're new to investing, new to property, new to budgeting, our podcast and show audience has a variety of people, and it's a kind of big revolving door. We get advanced people come in and leave because I'm not advanced enough for them, or you might have beginners come and leave, or people that are just there for the entertainment value. But Amanda asked in the group, small investing. If you had 6 to 10K to invest short term, where would you invest? I'm talking 10 to 12 months. Now, I guess coming in John Pidgeon's from the This Is Property podcast, in your world, because I'll throw to you because you can only talk in property language.
Brow.
Yeah. What's the, in the property world, what would you say short, medium and long term with property?
With property only.
Ownership. I won't say residential home to buy and live in or investment unless they're different. But what is it for you?
I think short term we'd refer to as probably 1 to 3 years. Like you're doing some sort of development or project that says I'm going to move it on after that period once it's complete. Now, it could blow out longer, but generally that's where you'd be.
Yeah.
Midterm is your sort of 5 to 8 years, and then longer term we would say a full cycle, generally speaking. So anything from 8 to 10 onwards.
Yeah, right. Because I would think in my money world, and this is cool, like I agree short term in my world is under 3 years, would be considered short term. Medium term, I'm thinking 3 to 5, and long term 5, 6, 7 plus years.
Yeah, well, I saw a stat the other day in real estate that the average ownership time is 22 years.
For a house?
Yeah.
Yeah, for ETF it's probably 10 minutes.
Yeah,
because people put money in and move it out.
That's always the difference, isn't it? It's like it's a rigid beast, property.
Yeah.
So very different, but it all comes back to your thinking.
Yeah, so Amanda, because you want to invest in what I would say is definitely short term, and you've actually literally said that, short term, and you've specifically said 10 to 12 months, I'm personally thinking we're not entertaining any type of investing. We're keeping that money in cash, in a savings account, online savings account, not at your transactional account. We want some interest bearing. I don't know if we need to be a candidate for a term deposit, but we do know one thing. If you are talking 10 to 12 months, there's a reason that you need it to be 12 months. So what's happening in the 12 months?
I need to double it.
Well, maybe go to the casino.
So what if Amanda's saying, well, I get all that, that's boring. Yeah, so it's like, okay, I know Captain Sensible says I shouldn't be doing anything with it, but that's what I want to do, and I'm resigned to the fact that I'm going to do something.
Well, I don't think, if you want to double this money or turn it up within 12 months, you're not investing, you're stepping into speculating.
I know, but so, okay, call it speculating. I'm going to do that. Because realistically, if you put 10K into an average performing ETF or whatever it might be, what are we expecting? 7 to 10, 12%?
Maybe. It could be a year where it's -5.
Yeah, so, but on the average returns.
Yeah, I mean, you would target with equities, broad-based equities, we'll call it 8 or 9%.
Yeah, so let's get a better result at 10 for my maths and say, well, okay, I invest 10,000, I get $1,000 return. Is that worth it?
Well, it isn't, because what happens in 12 months' time where you need that money and the market has tanked 10% and now you've only got $9,000.
That's right.
Now, what I've actually done, Amanda, because it's all got to do with risk and reward and a premium for risk. So if we invest in equities, we're taking a risk because the capital isn't secured, and we should get a premium for taking that risk. So based on 8%, $10,000 if it was a perfect 8% for that year, we'll just call it no income, just growth in the thing, $800. Simple. Now, if you just got that $10,000 and found a really good online bank account that might pay 4.8%, that's $480.
Term deposit or just
Whatever.
Yep.
Whatever. It's capital secure, so it's not going down. It's backed by the government, so if the bank goes under, the government will give you $10,000 back. So the difference or the spread between the 4.8 and 8% over that year, knowing that it's not a guarantee, that 8%. Term deposit will be a guarantee. That's $320 difference that you would be rewarded for taking on that risk. I don't think it's worth taking on that risk to get an extra $300 because what if it goes backwards?
I agree.
Now, it might go up to 15%. We don't know. But we just need to all calm down in this fast-paced, crazy world, and this clip won't even age well. You know, AI's here. Everything's here. Or even go back, 1950s, microwave. Oh, I can get food, throw it in the microwave. I don't have to spend 40 minutes boiling a stove. I can just zap it, right? We are conditioned for things to happen fast. But that's not the fundamentals of investing hasn't moved with the mod cons of society.
No, it's still a boring, considered, long-term approach.
Yeah.
I could argue that anyone in that situation could save that difference.
Yeah.
If they just knuckled down and made a couple of changes.
Well, we know any time you've got a portfolio with under $100,000 or a bank account, the best return that you're going to get will be the capital contributions. So if you saved $100 a week into that portfolio and there was $100,000 in there, that's 5% of your own money that's going in. Now, that $100,000, once that invested, that's going to generate more than 5%, hopefully, might do 10% one year, which would then be $10,000, which is more than your capital contributions.
Yeah.
So I think what I want to say to Amanda, you don't have to get invested. It's okay to keep the money in cash.
Boring.
But you talked about, speculative before and all that. I only put money in speckies or stuff like that or, from walking past the casino, I got $50, I put on roulette. You can't even do that at the start now. You got to register.
You can't use cash.
We were there for a show the other night and went upstairs trying to get some dinner and I had cash. I'm like, I'm going to put $50 on roulette. Wouldn't take my money. I'm like, stuff this. I'm like, I'm going to shove this in a poker machine. You've had to register. I'm like, all right, I'm walking out.
To have a card or a chip or something.
So with the Star getting done for money laundering and all that stuff.
Washing.
I think they've really turned it up. So you have to register and get a playing card.
Yeah, okay.
So anyway, I'm like, all right, I'm not registering, don't care that much. I was literally just like, I'm here, I got $50, let's blow it.
How much would they have lost on
mate.
potential?
Well, then I'm just like, I don't care about gambling that much. I'm literally going down and we're watching a show. So, but the reason I say that $50 or that quote unquote, if Amanda said, I've got $6 to $10,000 to blow to try and double, it's a different conversation. It means our financial house is taken care of. We've got our emergency fund. We're out of consumer debt. We've got our goals happening. And it's just the money on the side for speckies and stuff.
Yeah, it's relative in our life, isn't it?
Yeah.
Like your $50 at the casino, her $10,000 is relative. Like Kerry Packer put $4 million on a horse to win the Melbourne Cup.
Did he really?
Might and Power, 1980 or 90.
Did it win?
Yeah, it won by like a half nose or something.
Yeah.
Like,
but I think,
so to him, that's probably the same percentage as your $50 at the casino.
Yeah. So my point is, if you have short-term money goals, and I mean less than 3 years, we're not entertaining investing. I'll carve out the first home super saver scheme. If you're saving for a first home and all that within the next 3 years, we'll carve that out. The reason that I think medium is 3 to 5 years, because you might potentially say, look, I've got 10 grand here. I think I'm going to need it in maybe 3 years. We might put it in a Vanguard Diversified Growth Fund that could be a 70-30 or a 50-50. So we do have some exposure to growth. And then over the next 3 to 4 years, and always look at the holding document, and they'll tell you the minimum suggested hold time. And you might say with this medium-term stuff, well, if we get to the end of the road and the market isn't that great, we can defer taking that out. We can push the goal out 3 or 4 months and just see what happens.
Let's play a game. What do you think Amanda needs it for in 12 months?
I'm not sure. We'll find out once we get the podcast started. This episode is brought to you by Sphere Home Loans. If Amanda was buying a home, I would want her to contact Sphere Home Loans, get some information. I want her to give the broker high-level details of her income, if she's got a spouse or partner, savings, what she's looking at buying. They'll be able to give her some options with different lenders and work her through her options. Sphere Home Loans is a partner of the podcast, and they've got a dedicated team who look after listeners just like Amanda. I'm joined today by, as he takes a sip of water,
John Pidgeon.
And we're going to do the Money show right now. You're listening to Money, or as the regulars like to call us, M3. Everything discussed on the podcast is general advice only, which I'm licensed to give, and details can be found in the show notes. My name's Glen James, former financial advisor, now podcaster. I host this show and a show called Retire Right. I've also got a book called The Quick Start Guide to Investing, which you can check out wherever good books are sold, or there's a link in the show notes. Otherwise, thanks so much for listening today. Now on with the show.
I reckon it's a car.
You reckon it's a car? 6 to 10K. If you had 6 to 10K to invest for the short term. So she has the money. She's got the 6 to 10K. And she needs it in 10 to 12 months.
Upgrading from her first car to her second car. Bit of luxury.
Yeah, I don't know. It could be travel.
Could be travel.
You know, we're going to go over to do the European summer next year.
Could be planning to start a family.
Who knows? But we know one thing. If it's under 3 years, keep it in cash.
Keep it liquid.
Keep it el liquido. All right, just a bit of housekeeping. Remember, if you do want to buy the Quick Start Guide to Investing, our book, this is Property Book. If you want to buy a Money t-shirt like I'm wearing now, might even sell you the one off my back if you want. Tote bags.
Sweats free.
We've got our own store now. We'll put a link below, or you can just go to moneypodcast.com.au and click shop or something like that. Many of you have asked us, where can we buy your books from so you benefit the most? And that is directly through us. So I've bought some stock off the supplier. Gina, who was on our podcast, This Is Business, which is a cracking podcast that's now weekly, she has a fulfillment business. So the order goes in, money goes to my account, the order goes to Gina with the details, she packages up, sends it, and once a month sends me a bill for the postage.
Easy as that.
So thank you, Gina, and thank you, everybody, for playing along at home with us. All right, Nicole.
So Nicole says, talk to me about super splitting. I've been binge pod listening and it's come up a few times. I don't see the point. What am I missing? What's the financial benefit? Hubby has less super than me and is slightly older than me. The assumption being we grow old and retire at similar times. Is there actually a benefit of our super balances being closer together? If relevant, WA, super is not part of assets in the event of a relationship breakdown last time I checked.
I thought it was a federal system now with the Federal Family Circuit Court or something.
That.
Is Western Australia operating in a different vibe with family law property settlements than the rest of Australia?
So I suppose for Nicole, It's on the assumption of equality, isn't it? It's like,
Well, and I do have a little thing here, and this is grain of salt crap because I've got ChatGPT. I'll just circle back for the corporates among us. Because it said, yes, Western Australia operates on a different vibe in family law, my words, it quoted it, for property settlements because it's the only state that hasn't fully referred its powers to the Commonwealth under the Family Law Act for de facto relationships. Interesting.
So de facto's only.
Well, here's how it plays out. Married couples, if you're married in Western Australia, it's the same as the rest of Australia, property settlements and parenting matters.
Yeah.
But de facto couples in the rest of Australia, property and maintenance disputes go in the Federal Circuit Court. That's what I thought before. But WA has its own laws for de facto property and maintenance matters. So
Right. So for Nicole, she says hubby, so she's not part of the
not a de
WA
facto
system.
No, she's federal because she's not de facto. Also, at me, don't take that. Get your own legal bloody.
There we go, ChatGPT. Yeah, so there's you could debate this for forever and a day, couldn't you? Like, well, you've worked for 10 years, I've worked for 10 years, we've got different super balances because our incomes were different. We either accept that or we say, no, we're going to balance it back up. I had some time off for paternity leave, didn't get paid super through that time, right? It's going to be – life's not equal.
No. Thanks,
Next
Gandhi.
question.
Yeah. No, but I think it's – so basically she goes, well, what's the financial benefit and is it worthwhile? It goes back to you and your partner, what's important to both of you. And I think making sure we're both looked after financially in the event of something going down is and should be talked about and considered.
Yeah.
Now, one of the reasons in terms of the financial benefits where you may super split, you've touched it, if one's been on leave and whatnot, we've made the view as a household that, well, I took a blow in my super for 12 months, so we're just going to slowly top up and get to a bit of a parity.
Yeah.
That's number one. The other thing, it could be beneficial later on if there are different ages, and if someone is older, there could be a compelling argument to load up the lower age spouse's super with more super than the older one, because when the older one gets on age pension benefits, if they're eligible, blah, 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 the younger spouse's super is hidden from Centrelink assessments. So that's a way that you could do it. But I think it just needs to be a discussion. Do we want to try and have the view that we're in this relationship, we share a house, we share a bed, we share a joint bank account. Sure, we've got our own bank accounts for our daily stuff. We're basically all in this together.
Yeah.
And it's a bit...
yours is mine, mine's yours.
Well, but it's, in this day and age online and, every time you talk about this, it's like touching the freaking third rail of like getting zapped. But at the end of the day, are you a team and do we want things played out as a team?
So is a lot of the super splitting down to, well, in the event of something going south, i.e. a divorce?
Yeah.
Because at the end of the day, it's all good until it's not.
That's
so
right.
we could say, okay, don't go with the super splitting and you've got 500 and I've got 300.
Yeah.
And now we're divorcing and we're splitting it down the middle anyway, right? Or
But it's not, and this is it, like I've had enough to do with family law.
It's never down the middle.
And it's its own beast. And if you can keep out of family law courts and all that stuff, you'll be better off. And you've just got to think, like if in this instance, this is occasionally this comes up, but I would say Nicole's vibe here is the outlier where the wife has the higher balance than the husband. Sometimes it's the other way. Now, there could be reasons for that. Old mate could have been self-employed for the last 5 years.
Yeah.
Old mate could have been a stay-at-home dad for the last 5 years. Who cares? Whatever the reason is, going forward, do we have the view that our your earnings and my earnings are the earnings of the household. And this sounds like 1950s trad.
Yeah.
Trad wife and trad husband.
Yeah.
Does all income coming to the household, is it ours, regardless of our roles, regardless of what we do, and how are we proportioning? I've got cognitive decline. I can't even say the word cognitive.
Your England's suffering. So
I can't recall stuff as fast anymore. I think I know what it is.
Too much caffeine. So that maybe we're at a stage where is it old school to be saying it's all in a pool to be shared together? Are we at that stage in 2025?
Well, this is the thing. It's a very interesting point, this super splitting thing, because on one side of the ledger, I wish we had Rach here for this discussion so she would put a woman's touch on it, but we'll go there and get cancelled anyway. You know, one side, you've got to keep away from the extremes, I believe, in life, okay? So one side of the extreme is we're married, we're together, but we keep our money completely separate, all right?
That's the extreme.
That's one extreme. The other side of the extreme is we do everything together, supers at parity, blah, 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 right? And we need to do super splitting to top up the lower income earners. But it's just weird in society. It's like, well, I don't even know where I'm going with this, but
both ends have a voice. Because it's controversial, maybe
I just think sometimes there is conflicting messages. Like if you hang your hat on your one extreme, that everything needs to be kept separate, you better make sure that logic rolls out in every other part of your life.
Yeah.
And if you're on that one side of the extreme, does that mean you don't super split because what's mine is mine, what's yours is yours?
Yeah, and I think, as said before, like it's all good until it's not. So in the event of something going pear-shaped, what we said 10 years ago, oh no, I've changed my mind on that now. Like it's all for their own sort of thing. But if I'm Nicole, I'm saying, well, do what you want to do. As long as you're both on the same page, you and hubby together, then...
But that's the bigger thing, isn't it? Like if you're married or with someone, you want to make sure, and I've used this terrible analogy before, usually there's somebody in the money driver's seat, right? So they're in the Facebook group, they're listening to the podcast, they're nerding out on money. Usually that's the case.
Yeah.
Now, I believe your partner can be a passenger. They're sitting next to you. They've got visualizing on, I can see the steering wheel, I can look over at the speedo, I can see the horizon, I can see out both windows. They're a passenger, but they're informed. They know where things are happening. I think that's not a terrible thing.
Yeah.
I think if I can wreck this analogy and destroy my reputation, everything at the same time, you don't want your partner to be in a box trailer covered in the back, just blindly going along with things.
Yeah, because hard to breathe.
They're on the journey.
Yeah.
They don't know where they're going. They don't know what's happening.
They're not supported.
They're just like, heads in the cloud, which ignorance is bliss and all that stuff. But I think you want to make sure you can speak to it more being married, but I would imagine you'd want to make sure if one person's the driver that you have support from the other person so we're on the same page even if one's making the day-on-day decisions.
Yeah, without a doubt. I think there's so many different versions of it, but your analogy of someone in the box trailer is bordering on like financial abuse.
No, I think it's just more, it could be if they've been locked in the box trailer, but if it's more of a heads in the sand, I don't care, darling, you just run it, I don't care.
Yeah.
That's not good because if things happen, if the driver dies prematurely, the person locked in the box trailer or without the vision, they don't know what's going to happen. Now, if there's a relationship breakdown, you might get taken for a ride because they've done stuff. Or, the third thing.
Not in the trailer.
You've been, not even in the trailer, but the financial abuse thing, they've locked you in the trailer.
Yeah.
Which is a scary thing.
Yeah. And if you're my wife, you're in the passenger seat, but you're holding onto the rail very
The
tightly.
Jesus handle, yeah. Who's the driver with you and Amy? Or have you got one of those learner cars where you both have a steering wheel?
Put your own brakes on.
Remember the garbage trucks that had the two wheels?
Yeah, that's right. No, I'd say it's slightly me.
Right. But she's very much an informed passenger on the front seat.
Yes, yeah. And the transparency and communication between us is ever improving. Like it probably early days, it's like, oh, I've just gone and done this. Like not major decisions, but yeah, I think it's the transparency is the key.
Do you guys have a thing where it's like we can both spend up to $500 without kind of running it up the flagpole? Like, is there a threshold, or is it more of a no matter the cost, if it's a golf thing or a bike thing, I got to let her know?
No, I think it's just a communication thing to say, well, she's thinking about this or I'm thinking about this. Is the other supportive or encouraging?
Do you guys share a daily account?
Yeah.
So
share everything.
So you go and buy
even the bed.
Really? Interesting. I've been in John's ensuite.
No, you haven't.
I have. When you showed me around the house.
Oh, right.
You got the two shower heads.
Yeah, okay. We actually hadn't even moved in by then.
No, that's right. I bet you tested the shower already. Hey,
mate.
Hey, so if you go and buy a coffee down the road, she can open the app and see it.
Yeah, correct.
Yeah, okay, cool. Yeah. Nice. So you can't surprise your bride with some flowers.
Well,
you want to make sure you get the flowers home.
Get today.
Yeah, that's right. Yeah. What's Crystal have to say there, Johnson?
So Crystal says, investing for younger kids via super. I'm 39 and have been setting aside $100 a week for our 3-year-old since she was 1. Well done. I want to be able to gift her some money towards a house when she is 25, so I'll be past 60 by then. Because of my tax bracket, I haven't invested it yet and am just holding it in a high-interest savings account. I'm aware I'm still being hit by my marginal tax bracket by keeping it here. I want to utilise the carry-forward concessional contributions, but I'm in a state-based deferred tax super scheme, so that option is not available. I'm wondering about opening an account with a separate super fund to access this and the reduced tax by investing in super instead of outside it. Has anyone done anything similar? Anything I should investigate further before jumping in? The money won't be accessed until after my preservation age, so that isn't a concern. Thanks all. Whew. Wow.
I love it. Love it. What's your view? I know you've got a little investment bond for the kids. Do you still add money to that, or?
Yes, monthly.
Right.
Yeah.
Okay.
Dollar cost averaging, I reckon.
Yeah. Do your kids know that it's there for them?
They do, yes.
Because they got one each, don't they?
Yeah, one each. So as they've got older, and don't need to be too old, like I probably wasn't doing it at age 3, but probably 5, 6, well, starting school, I suppose, we're talking about what that is and what it's doing and what we're contributing and how that looks for them later on, yeah. So, yeah, I think it's a great concept because, like, you could say I'm putting it away for a kid but never give it to them. The concept of putting it away is a good thing, isn't it?
Yeah, and most people will do that until they need a new lounge 3 years later.
That's right. Yeah. I don't sort of vibe the whole do I set up a new super? Like it all seems effort for reward is probably
I disagree with you on this.
Okay.
Crystal may have heard the series that I did, Investing for Kids.
Okay.
Crystal's in a really good sweet spot here because she's 39, so the money doesn't, in 20 years, the eldest is 3, the kid will be 23, right?
Yeah.
It's a really cool way to set up an investing account that's outside of your name because super isn't in your own name.
Yeah.
It's on a trust and you're a beneficiary. So superannuation falls out of your estate plan and it's not counted for, personal assets for various things.
Yeah.
Yeah.
I'm just does super need to be part of the conversation, or can it just be an amount that's put aside after tax?
The good thing about this is you can put money aside after tax and you're just using super as the investing account. So you don't have to set up an investing account and put a designation to a minor on trust and all this stuff.
But wouldn't the bond do this? Wouldn't the bond do the same thing?
It would, but in super, you will have a lower tax rate of 15%. So it is better than the bond. Because the bond's taxed at up to the highest company tax rate, 30%.
After 10 years?
Well, after 10 years, you can make withdrawals without capital gains tax. But if you did a 10-year investment in an investment bond and in super, you'll always be better in super. So the reason why we want to do this in Crystal's super, we'll call it 40. We set up a separate super fund, and you can just set up a growth option, 80-20 or something like that. You can put a lump sum in, either after tax, or I don't know if your work will allow you to salary sacrifice, but you could, either way, put money as a post-tax contribution into that fund. The cool thing is you set the child as a cis-dependent and a tax-dependent as the beneficiary. So if you died prematurely, that money goes to the child.
Yeah.
So it's theirs. You don't have to keep tax records year on year. You don't have to do anything. It's an awesome thing if you're having kids later in your 30s because you've got this super account. Now, the thing that you have to look out for is once you get online at age 67, and I think a lot of our listeners, because they're so good with their money and growing assets, won't get age pension in the first instance.
Ideally.
If the money's in your super fund, it's technically your asset for Centrelink. At age 67, if you were eligible for Centrelink benefit and there was money in there, you'd get caught by the gifting provisions. So it would be deemed as a gift. And you can only give away 30 grand over 5 years, no more than 10 grand a year. Now, that's not the end of the world if you got some other money. So you'd really want to make sure if you were, based on today's date, and in 20 years' time, it might be age 70, but you'd probably want to give that money away at age 62, for example.
So you just need to work out how much you're putting in and what that amount's likely to be.
Well, but that's it. Like at age 62 for you, the kid might be under 25 or whatever it is. You just transfer it then, or like it's not the end of the world. It's just one thing you have to think about.
So if you're having kids early in this example, if Crystal was 29.
Well, you wouldn't do super for it.
Yeah.
Only because she can access it at age 65.
Yeah. So that
or if she has a change of employment or ceases employment after age 60.
Yeah. So the preservation age is the key to understand here.
Yeah. I'm a fan of it. I think more and more my vibe has been, the more I did that episode on investing for kids, just build wealth yourself. And when they're old enough and you want to give them some money, give them some money. It's all good. I get it. Like people want to quarantine things just for the kid, but things could change. You just build wealth yourself.
Yeah.
And
I like having 3 kids. I like to quarantine because they have visibility over it to know that, okay, their name's at the top of that.
Yeah, and there is
education.
There are those things as well. And that's fine for a practical thing. You could just set up another account in your name and then just sell it and gift it to the kids.
Yeah.
But I get it. It's just such a complex, annoying thing, investing for kids. But if you're over 40 or 39 or whatever, this is the option that I would personally be taking. I can't use it for my niece and nephews because they're not cis-dependents of me, because they're not my children or financially dependent or a spousal partner.
Yes. Okay.
So I've got their investment bonds. Well,
Better
we'll be
have
back.
a couple of your own.
Sorry?
Better have a couple of your own.
I don't think it's going to happen, eh? Pretty old now. We'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au, and they'll point you in the right direction.
All right, we asked you in the Facebook group. And remember, if you want to join the Facebook group, there's like 95% of accounts that join the Facebook group are spam. I look at some of these huge groups with like 400,000 people in there. I don't think it's a real number, just from anecdotally what I've been dealing with. But it could be. But all that to say, there is a lot of spam. So if you're not in there and you want to join, where it says, where did you hear about the group? Put, I heard Glen and John get cancelled on episode 835. So we asked everyone, what is a one-time purchase that turned into a money pit?
Camille, my dog, lol, worth it.
James said his 1989 Mazda RX-7.
Yeah, I did hear that the early days they provide a bit of trouble. Matt says poultry started off as eggs are expensive. Now it's let these chooks ready for another poultry show this weekend.
That's awesome.
Let's get these chooks ready.
Stephanie, my house, so many hidden maintenance issues.
Jenny, hubby's first bike to ride to work. This will save us money because he doesn't drive anymore. I can't count how many bikes, replacement parts, clothes, gadgets, stuff I probably don't even know about he's bought since. Would have been cheaper to just drive.
Heather, home printer.
Brett, commercial winemaking business.
Mayra, jet ski, yeah, they'll do it.
Will. Marie says, I'm surprised no one has said a boat. Jet ski, boat, sort of.
Brooke, a horse. Nay. Cost thousands.
Punting or owning. Gemma, my ex-husband, best financial decision ever was to divorce him.
Yeah, great. Sarah, my husband's AeroPress. Who knew that there were so many boutique coffee accessories that make it possible to save money by making coffee from home from scratch? That's funny.
Gabriella, an air purifier for $120 that has $70 filters that need replacing every 9 days, like those old inkjet printers, isn't it?
Well, that's what old mate Heather said, the home printer.
Yeah.
And that's like the annoying thing. Like, we've got this HP here at the studio because sometimes it's just easier to print something and you can draw all over it.
Yeah.
And we're old. But you can only put the official HP cartridges in there, and they cost like $130 for 1 or 3 or whatever. Yeah. But yeah, what about you? Have you bought something that's been a money pit?
I wouldn't call it a major money pit, but my eldest has a conversion kit at the minute, which is bleeding him a bit of money. So
conversion kit?
Bike.
Right.
Don't know if they're entirely legal, but they're...
Are those battery things with wheels?
Yeah.
Yeah.
But he's learning the hard way. So I'm sitting there with a smile saying...
Yeah, I'm probably...
What about you?
I think the old Candy's Dream sitting out there in the factory, the boat.
It is, yeah.
I know, I think I spent 120 on it, doing it up and all that. I stopped counting at 120, but I think I've spent definitely spent 30 since then.
Wow.
So
and you could sell it for?
50, 60.
Wow.
But that's it. It's not an asset. It's a hobby.
Yeah.
Like, you can't go into or boats or anything that's hobby. You cannot go in with the mentality that I'm doing this because I'll be able to sell it for more and get the money back.
Yeah.
It's literally an expense for a hobby that you enjoy.
Yeah, and for mental health and other things, like you look at it and say, well, that's the price I'm paying for my enjoyment or my lifestyle or whatever it may be.
Yeah, and I love it. It's what I do.
Yeah.
Would I do it again if I had the option? No.
No one would. But yeah.
But here we are, John.
Yeah, here we are. And the good thing is you've got some assets behind you before you've gone and done that as well.
Yeah, and I didn't borrow money for it and all that. It was just cash flowed. So
we verified your existence right there.
All right. What do we got going on here? Oh, last question today.
Jack,
what up? This was in the Facebook group. I'll read this one.
Right.
Should I do like a sassy voice?
Like Jack?
Don't let others tell you that credit cards are not a good idea. It's a great idea if you're responsible. I've always had a credit card and cancelled it earlier this year due to applying for a home loan. Then, 2 days ago, bought my mum a last-minute flight to overseas from my savings account. Facepalm. Realised I got to get her travel insurance too. Oh no, there goes another $700 of after-tax money for her 1-month travel insurance. My heart bleeds. Had I used a credit card to purchase the trip, the insurance would have been covered by the credit card.
The airwaves went off, didn't they, on that?
They did explode. Should I open the Facebook group and just read some real-time comments for a bit of fun? But what I do want to say, I think you'll find, Jack, that if you have a credit card and you pay for someone's flight who isn't your child, a spousal partner, or an additional card holder who meets the tick boxes and all that, they're not going to activate the insurance.
Yeah, Mum would have to have her own card, right?
Yes. I'm just having a look here.
And she's talking like Amex or something like that.
Probably. Yeah, like I looked at the because I've got that Amex Business Rewards for work.
Yeah.
I was looking at that credit card policy, and it was exactly what I just said.
Yeah, I had the same.
They generally don't give out free insurance to randoms.
Covers your family, but
yeah.
That's the thing. You look at the insurance, the fee annually, and you're always $300 or more
I think
for
mine's
those cards.
$450 a year.
Yeah. So you say, okay, $700 of insurance.
Yeah, I mean, this episode's going up on the 2nd of September. On the 8th of September, so next week, by the time people do this, I'm jumping on a plane and doing my around-the-world flight.
Look at you.
And I paid with the Amex. I'm just using their insurance.
Yeah.
I've got confidence in it. I've looked at the policy and all that. Travel insurance sidebar, it's actually because, there is so much markup in it. One, because they pay the travel agents heaps of money to flog it.
Yeah.
2, there's not many claims. So 3, when a claim happens, it's usually an easy claim to get out of. I've had to claim on it once where I had to go to a dentist in the US, and they just literally it was just so easy.
And does it cover cancelled flights and things like that?
Yeah, but you've got to make sure you book the flights and get the insurance right away. So if they cancel the flight, you're going to go and run and get travel insurance.
No, cart before the horse. And you've got to pay on that card, right?
Yes, that's right. So I had to laugh at this one. Shannon said, $700 seems steep. Are you traveling to Afghanistan with an oxygen concentrator? No, the mother's a senior who's 75 years old. Oh, no, I'm so funny. I wrote, sounds like a dream vacay. Mark said, I was going to post a similar question on credit card insurance. This would be my first time traveling overseas after obtaining this credit card. There is default Covermore insurance for self and family traveling with the CBA Ultimate Rewards. Should I be taking a separate travel insurance policy? Well, I don't think so, Mark. Yeah, this was a good one from Sophia James, no relation. If I married someone with a surname James, would you have to make them change their name to my James, or would I change it to their James?
Yeah. Take your pick.
I see a lot of comments on credit card travel insurance being quote unquote useless, just So I thought I'd share the great experience that I had. I got sick while on holidays in the States this past Christmas with a very serious condition that landed me in hospital, in a bed in hospital for a week and needing very expensive treatment. Amex and their, I don't want to mention the name, but I accidentally did, and their insurance were incredible. They followed up and provided me with support by a registered nurse daily and covered my entire hospital bill that was $100K US.
I've heard that. They've always
Estelle
been
said
good.
credit card insurance is garbage. She did the right thing buying a separate policy. I'm going to probably disagree with that one because it's just a group policy. Like the Amex one that I looked at was just a Chubb travel insurance group policy. If I got a claim, I'm not calling Amex, I'm calling Chubb.
Yeah, no, I read up on the last one I used and it was fine. But I think it comes back like to the credit card bit. The
get on with your
root
life.
of the issue for people is they spend dangerously on it, don't they? So yeah, you're not buying a card or you're not taking out a credit card for points or travel insurance as a primary. If you're not disciplined with your day-to-day spending.
Yeah. So as I said, we did an episode. I don't know if it's going to be up after today. I'm just having a look. It might have been, a couple of weeks ago. I had James and Phil in here, and we did an episode. And we talked about points hacking and all that crap. I don't use a credit card for day-to-day expenses. I've got one in the business.
Your business.
Yeah, it's really easy because Jess has got a card. Rachel's got a card, Ryan's got a card. They can buy anything they need for work. I see it. It says the person who used it. They send the receipt to Dex. I get on with my life. They can spend whatever they want as long as it's needed. And if I say, what's that for? If they don't have a good reason, there's going to be a new sheriff in town and a position vacant. So that's kind of the that's why I've got one in there. And we put all our we've got almost $40,000 worth of subscriptions that I just do it on that. So, but yeah, for personal, I just have my Up Bank card.
Yeah.
I just don't run my life around the fringe optimization strategies.
Yeah.
I do my life, my ordinary course of business. Sure, I'll pick up some points on the Amex. If they said, Glenn, we're taking your Amex tomorrow for business, I'd be like, sweet, no worries. I'll just go back to using the ANZ business card.
Yeah, that's right.
This is the whole trap. You can't, in full circle, you can't outsmart the normal laws of gravity with life. So live on less than you earn, invest the rest, keep it simple. Don't be getting a new credit card every week and, I'll get this and activate that and spend $3,000 in the first 3 months and do this. And the old analogy that I used to talk about in my online course and seminars, remember those, and you probably remember when I tell you, the old illusionists in Vegas, Siegfried and Roy.
No.
They were the illusionists with the white, they had the tiger on stage. They had a white tiger.
Oh, right. Yeah, gotcha. Yeah.
So Siegfried and Roy, they were these illusionists, and there's a photo here, and they had these tigers on stage in Vegas, and they had the permanent spot, and they'd actually tamed the tiger for the live show. So they had tamed their credit card. Using it, everyone get a tiger for your show.
Yeah.
Do you know what the tiger's designed to do? Did you know there's 3 things on Earth that actively hunt humans? I learned this on Alone the other night. Polar bear,
right,
tiger, and other humans.
Right.
Just innate. If you see a tiger in the bush,
run.
You must not be in Australia. If you see a polar bear in the bush, you must not be in Australia. They're going to get you. So they tame the tiger until it turned around and mauled one of them live on stage. And it took 4 men and a fire extinguisher to get the tiger.
Yeah.
It will always catch up on you.
Yeah.
The chickens will always come home to roost. Don't try and optimize. Don't try and just live your life, be strategic, be on purpose, be focused, be disciplined. Turn off the noise.
Yeah.
Buy travel insurance for mum. Big deal. Keep your credit card closed. Also do what you want, don't care.
Caught myself out the other day trying to keep my platinum status with Virgin.
Ooh.
Like, hang on a minute, why am I paying for that extra flight cost? Like buying an extra flight to get more status credits to keep the platinum status. Like, John, you're an idiot. Sharpen the
So what are you doing? Like, are you committed to Virgin or what's your story?
I am. I made that conscious decision about 3 years ago.
Yeah, nice.
Yeah. And I know you're on the other side.
Well, I'm just Qantas because I'm gold status.
Yes.
And like, I'm lifetime silver now, so I'm almost lifetime gold.
Hey,
Yeah.
geez. Travel a lot.
Well, yeah. I don't actually anymore. You know, since doing this studio, I rarely travel now.
Yeah.
Because I used to go to Melbourne every...
It's like having a kid.
Yeah, pretty much. Like I used to go to Melbourne maybe once a month.
You do the States and everything, so that
I do the international
brings that
gets
up.
the status up, yeah.
Yeah, but in saying that, in terms of the points, we're going to Adelaide for Gather Round or whatever it is. They all play AFL in the one city over the weekend.
Magic round that the NRL do.
So AFL in April. I use points for that, whole family.
Yeah. I do a thing where this might seem obvious, but I'll use points for pleasure.
Yeah.
I just told the boys the other day when I went up to Bali, I did the business return Qantas, 300,000 points.
Yeah.
I wouldn't pay for business with my own money.
No.
If it's a business expense, I might. I've actually got a good everyone, since we're there, actually we'll put a mid-roll marker in, make some more money, and I'll come back and tell John what I did. So, and if you need to go, we're pretty much over with the episode. So we'll put a mid-2 in, guys, right now. So John's coming up to FinCon with Catherine and his team.
I am.
So are we getting the same flight?
I don't think so. I think I have duties. When are you flying out?
Monday the 8th. At 4 p.m. or something?
No, I'm flying Tuesday.
Oh. Why?
Because it gets me in Tuesday.
Yeah, but you don't want a day to recover and get over jet lag before you hit the conference on Wednesday?
Well, I get Tuesday afternoon. I think I get in like Tuesday 1 o'clock.
Right.
Tuesday 11 o'clock
Okay.
or something. Yeah. So no, we won't be. But you were saying?
Yeah. So I looked at because I'm going to LA.
Yeah.
Then going over to Spain to do some content with Nick. Mm-hmm. Then I'm doing the live show in London.
Oh yes.
I've sold
How did you find a venue for that?
I just booked at the hotel.
Oh, yeah.
Holiday Inn, yeah. So we'll do the live show. And we've sold like 15, 16 tickets.
Okay.
Yeah, and I don't want to really do more. Like, I'm happy with that if no more sold.
Yeah.
Like, I'm not making money out of this, but I'm like, I just want to do a show with the London Aussies.
Did I tell you I ran into someone listening to the podcast on the way to the soccer?
And then because if I have more than 20 or 30, I need a bigger room and you need a sound PA.
Yeah.
I'm just like not doing that. So Nick's going to do the live show with me.
Oh, yeah.
Then I'm flying. So I will usually book a round the world ticket, just myself. But for the first time, I went to a travel agent and I saved thousands of dollars.
Really?
Yeah, because I did it through Finnair, and they code share with like Qantas, Cathay, and all that. Because I went to the One World website, and just everyone, if you're actually, because she was really good. Travel. I'm just going to find the travel insurance that I used. Roundabouttravel.com.au. They're in Adelaide, and I was dealing with
for international only.
Oh yeah. Just the ticket. Who did we use there? Lianne. Lianne. Murgard. From Roundabout Travel in Adelaide. she was good and saved me so much money because I think I worked out they've obviously got wholesale software that can pair the legs better and it's cheaper.
Yeah.
Honestly, saved thousands of dollars doing it through and I'd never used a travel agent for years.
Yeah. I wouldn't even think to use them.
I don't know if you need it if you're just going up there and back.
Yeah.
But
it even talks, I'm just on their site now, it talks about business class upgrades and things like that as well.
Yeah. And then I had to change my plans because of, with the London show, the date changed and I had to change my flights. She just did it for me and paid the extra. So, yeah, I would really, if you are booking that round the world ticket, I think definitely there's a case for using a travel agent because they will have access. And I tried. I did the One World website. I did Qantas. I think going direct with Finnair didn't let me do it with the code share because I wanted to obviously get the status points.
Yeah.
So, yeah, John's coming up to FinCon.
Yes.
And we're taking Luke, our videographer. So do you want him to shoot you getting some grabs or anything up there?
Yeah.
Because if you do, you can pay me some money because I'm paying for his flights and accommodation.
Yeah. Yeah, look, let's give Luke some work. Well, I'll see what Catherine's up for first as well, but yeah.
Because I'm hosting, I think, one of the last sessions. I was like, I want to get a local photographer and to come in, get some shots because it's just good when you've got, 1,000 people or 500 people and you're on stage. It's a really good opportunity. And I'm like, by the time I find someone local, it's probably going to be $1,000 US, right? So $1,500. It basically costs just over $3,000 to fly him up and back in a week accommodation.
Right.
I'm like, just come up with me.
It's pretty cheap, isn't it, really?
And then I'm like, we'll do a content planning session with Ryan and Luke. So Luke can be up there shooting, getting stuff because I'm going to do a heap of vox pops for Instagram.
Yeah.
Then he can just upload the files and Ryan can edit them here.
Yeah. So
how
many come to the conference?
It's usually 1,000 or so.
Is that?
Yeah. That's good. It's just we encourage. So we'll do a live episode up there as well, or we might get Joe Soul Sea High. He's been on some campfire chats.
All right.
We might do a campfire chat. You, me, and Joe. He used to be a financial advisor like me, and then went fully into podcasting.
Right. From Australia.
No, he's American.
Oh, he's American. Yeah. Cool.
He's got one of the biggest money podcasts in America.
Right.
Called Stacking Benjamins.
That'd be good.
So I'll message Joe and we'll organise that podcast and
looking forward to that.
Yeah, we'll take this offline, John, but I might give you a couple of mics to take up as well. Or at least I can take them and then because I'm going from Portland over to New York.
I can bring them home.
Yeah, because I think I only want to take 2 for Nick and I's content in Spain. Anyway.
Awesome.
If you're still watching or listening, your head's broken, but thanks for listening today. If you've just joined our podcast world, welcome. Lots of new listeners always. Lots of old listeners always as well, John.
Oh, there is indeed. Yeah, we're talking to them all the time.
You really are. My name's Glen James, joined by
John Pidgeon.
And we'll see you soon. Bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.